Good everyone. Today we are going to be talking about how to build bias with CRT. That's the candle range theory. So in the previous video we talked about how to build bias, how to build directional bias with key levels and market structure down to entries. So today we are going to be talking about how to build bias with the candle range theory, how to refine the bias rather with the candle range theory down to entries also. So this is the pattern, this is the classic candle range, whereby you have your candle, which is the range, and then you have your manipulation candle and then the distribution candle. That's just how the market moves: accumulation, manipulation, and distribution. So let's head over to the charts also. Okay, before we head over to the charts, this CRT, what's it all about? The CRT is all about identifying a point in price or an area in price where price takes out the low of a candle on a higher time frame, because I basically use the higher time frame because the higher time frame is a stronger time frame. So how price takes out the low, if it's a bullish CRT, price takes out the low and then you expect price to get drawn into the high. So this becomes your draw on liquidity at this point. This becomes your draw on liquidity. Also on the flip side, on the flip case or flip side, your price takes out the high and they expect price to come to take out the low: accumulation, manipulation, and distribution. So that's just what it's all about. So let's head over to the chart and then let's look at a live example of how to build your bias with the candle range theory. But first of all, before building your bias with the candle range theory, you must make sure you confirm where price is coming from, because that's one of the questions I usually tell traders. Whenever you come to the chart, you ask yourself, where is price coming from and where are we likely to draw into, right? Once you've answered this question, and then you can head over and start doing your analysis and then taking your trade. So at this point, you can see GPUSD will be bearish or probably bullish on GPUSD, but recently we've been bearish on GPUSD. I took some sales. I took a lot of sales at this point. Sorry for that. Taking a lot of sales from this point, and then also if we look at this higher time frame on GPUSD, this is the daily time frame. You can see that price is coming from this area. This is an order block. Sorry, let me take this off. This is a demand area on order block. As you can see, price is coming from this demand area. And what do we have? We need to see price sweep liquidity. You get to take out liquidity and then give us a break of structure or a shift in market structure, which occurred at this point. We had this sweep. This was the sweep of liquidity, and then we had this internal market structure shift, and also we had the break of structure at this point to the upside. So for GPUSD, let's see how it goes. We are bullish for now on GPUSD till price gets to this other point, till price gets to this point, I think. But for now, bullish on GPUSD for me. So price gave us a sweep and a break of structure to the upside, or a market structure shift to the upside. And then also, what do we have? What can we see in price? We expect price to come back to discount. You get me? Price come back to discount and then give us a reaction, and then we'll continue the bias to the upside. So that's how we do it. Price gets to your key level or your demand area or supply area, you wait for a shift and then you continue to the upside. So let's go back. So that's the particular point I want to use to explain this video. So at this point, we had the key level. This was our key level, this OCL. Building your bias with the candle range, you wait for price to get to a key level, give you a reaction, or probably give you the candle range pattern before you now start looking for buy or sell to the downside or to the upside. So let's play price forward. As you can see, price got to our OCL, that's our key level. Price got to our key level and then give us a reaction. Let me mark it out. Price got to our key level, give us a reaction, and then what can you see? Price took out the low of this candlestick. This is the bearish candlestick. Price took out the low and the high was still standing. So since we know we are bullish, we can as well swing the trade to the upside, but no, we are paying attention to the single candle formation or the candle range. So this is the candle range high at this point. So this is going to be our target, right? So we already have price take out the low, and then we have our target in place. So what do? We head over to the lower time frame. Possibly you start from the H4 time frame, but for me, once I have a daily CRT, I head over straight to the 1 hour time frame to look for what my sweep and my break of structure. So let's head over to the 1 hour time frame, and then possibly my POI on the 1 hour time frame. So for this video, I'm going to be doing three examples. So we had price. This was our sweep of liquidity at this point, before price got to our key level. And when price got to our key level, after market swept, market gave us what? Market took out this high as the structure shift to the upside. But before price took out the high, price gave us this pullback. So this is what our inducement, right? So you for what? Your sweep, your break of structure, your inducement, and then you pick your key level for your entry. So this was the key level, this OCL, or this was an order block. But for me, like I said in my previous videos, I work with the body of the order block. So I pick the body of the order block, I have my inducement, break of structure in place, and then this is my target, right? You place your entry, place your stop loss right below this low, 8 pips for this, and then you target the high. For me, I do a minimum 1:6. So 1:6, I can decide to like exit, right? So this is the high, target the high. Let's play price forward, and then let's see how the trade played out. You can see price played out. Price is coming from a key level. Price gave us the candle range pattern, and then what our criteria: sweep of liquidity, a break of structure, inducements, and then we pick our key level at discount or premium. So that's it for this one. And one thing I need to let you know is if your directional bias is correct, or if your technical analysis is correct, automatically fundamentals, that is the news, will have no other option than to get your one good thing is just that when your technical analysis is correct, whenever you have a news event or a fundamental, whatever, price will get to your TP faster. So this is the weekly CRT. The first one was the daily CRT. This is the weekly CRT on Euro AUD. We have price take out this high, and the low was still standing at this point. The low was still standing, and our market structure, you can see breakouts to the downside. We're coming from the upside to the downside. And then also, where was price coming from? Price was coming from this key level. Price was coming from this key level. They took out the high and then took out the low. So let's go back and then see how we would have taken this trade if you just saw the CRT, and then let's see how it's going to be. So here we have weekly reject weekly. That's the key level. Weekly reject weekly. And then price took out the high of this candlestick, and the low is still standing. So what do? We head over to the daily time frame, because we cannot take our trade from the weekly time frame, and also we cannot still take our trade from the daily time frame. We have to head over to the 4 hours time frame. But on the daily time frame, I want to see a breakout, right? I want to see a breakout to like confirm that the weekly time frame, the daily time frame rather, is in alignment with the weekly time frame. This was the breakout to the downside. If you go to the line charts, you're going to see it more clearly. So this was the breakout, as you can see, breakout to the downside. And then since we have our breakout to the downside, what key levels do we have? We have this key level at this breakout point. So we are now going to like follow up the same process that we used to build our bias with key levels. We have this breakout point, and then we have this apex at this point. So what do you expect? You expect price to like give you a rejection from these two key levels, right? So let's play price. Okay, price gave us a rejection from the support become resistance. So we head over to the 4 hours time frame. Since we already have our daily reject daily at this point, this was daily reject daily. So now let's refine our key levels to know where we could have taken our trade rather. So price was coming from this key level. This was a key level at this point. This key level. This one. So price was coming. That was the key level that daily rejected daily from, and then we can also see we have 4 hours breakout to the downside, right? We don't really need to go to the line chart, but let's go to the line chart so you can see it. can see we had multiple breakouts to the downside. So now what do we have to do? We have to refine our key levels. We have to refine our key levels to know which we would have taken our trade from. So we have this key level. We have this key level. Also, we had this pullback because many a times I like to see inducement before my POI. So we have this pullback as our inducement. And also this key level, as you can see, the wick is too long. So we have to like refine to the lower time frame, probably the H2 or the H1. So then refine our key level and then know where we would have taken our entry from. So on the 2 hours time frame, let's go to 2 hours. So on the 2 hours time frame, this key level is an OCL. But generally, I recommend using the apex. And also where you have multiple key levels aligning, that's also a strong level. So you can see we have this apex at this point, we have the second apex, and then we have this support become resistance, SVR. So these are 3 key levels aligning at the same point. So this is a strong point of interest or area of interest. So this was, you just take your sell from this point, take your high probability sell, place your stop loss above the wick, and then for me I do a 1:6. So 1:6, I'm out. Let's see, 1:6, 1:6, I'm out, and then we'll continue selling. Remember, this is our target. We'll continue selling until we get to our target. So let's play price forward. Alright, so price go to our target 1:6, and then we'll keep looking forward, sell entries to the downside. If you want to swing, also if you see your candle range, you want to swing, fine and good. But for me, I would want to get in and get out the same day, because I don't like holding trades over the weekend or holding trades to the next day. So what do? Go back to our daily time frame, because we are coming to the next day to take also our sales. So on the daily time frame also, we had another breakout to the downside. This was the breakout confirming that our bias is still intact. And also we had a daily reject daily at this point before the breakout. Daily reject daily, which caused the breakout at this point. A daily reject daily rather. This point, daily reject daily at this point, which caused this breakout to the downside. So daily reject daily, daily breakout to the downside. We go to 4 hours to refine our key levels. As you can see, it's not really clear on the 4 hours time frame. There are no key levels on the 4 hours time frame, so you can actually skip the setup, or you still look for key levels, you just refine to the lower time frame. But for me, since everything is not clear, I don't think I'll take a trade because of all these weeks. So let's play price forward. Let's see if we can get another entry, another day, following the same weekly bias. Alright, so this was a sell also I took, the second sell I took. So I think at this point, let me head over to the 4 hours. So it's from the 4 hours I marked it out. Alright, so this was it. So this was the point that I posted on my Telegram. So this was it. Support break to become resistance, and then there was an order block also. Remember I said if you have 2 key levels aligning at the same point, that's a strong level. So this is a strong level. So what do? Since it was a Monday trade, you couldn't take your trade during this ASEAN session. Rather, during the ASEAN session, this was around 1. That's when it mitigated. So I took my sell in the morning. So let's play price. Let's see. I took my sales with confirmation. Alright, so this was the sell. Price got to my sorry, let me go back. price got to my area of interest, you can see this was my key level for my entry, and then gave me also a CRT pattern. So this was my confirmation, right? So this is confirmation that price is going to hold to the downside. I can easily take myself from here, from this key level, because that's also my confirmation entry. I can place my stop loss above this high and then target the final low, the candle range low, verifying down to the 2 hours time frame. As you can see on the 2 hours time frame, we still have the same pattern. So this is a high probability sell key level or a sell zone. So I place my sell at this point, place my sell limit, place my stop loss above this high, and then targeted the last. So it's about a 1:9. My stop loss was aggressive. Okay, so let's see how price so let's see how price played out on this particular setup. So even with confirmation entry, you can see you rode the bias from this point, from the top to the down. So even if you caught only 2 sales with this bias on the weekly time frame, you would have made about 1:6, 1:6. That's about 12% if you're trading a funded account, or any amount if you're trading your real account. So that's just how to go about the bias. And I think let's go to BTC also. So this is BTC. Also on BTC, there was a sale I took, I think it was around May or so. It was following the same bias, candle range theory. So this was the point. So at this point, we had price take out the high of this candlestick. Price took out the high of this candlestick. And where was price coming from? That's what I like to ask myself also. Price was coming from this OCL. OCLs are also key levels. And where was the last breakout to the downside? That's just confirming my bias, you get. So this is my internal bias. This way I'm going to be like taking or getting out of the market. Or you can also target this low. This will be your drawn liquidity, right? So this will be your drawn liquidity. So let's now refine to the lower time frame. So your 1 hour time frame. Alright, so as you can see on the 1 hour time frame, like I always see, daily CRT, I just head over to the 1 hour time frame straight. So we had a sweep, price took out liquidity, and then gave us a break of structure to the downside. At this point, this was an internal break of structure, or our market structure shifts rather. And then also we had the break of structure confirming that we are heading to the downside. And also, what can we see? Price was already coming from this other block. This was a valid order block which caused the sweep of liquidity. So price was coming from this other block. And where next did I take my entry on this particular setup? I took my entry from this key level, because I like taking my entries mostly from key levels, Apex, QM, OCL gaps, SBR, RBS, other blocks. So this was my inducement. Price was already coming from other blocks, so I picked my key level, this was my inducement, and then took myself from this point. This was my candle range low. Target your drawn liquidity. Stop loss aggressively at this high. 1:7. It was giving me about 1:6 because my stop loss came at this here. So this was it. Target your drawn liquidity, and then let's see how price played out. So on any pair at all, be it synthetic indices, be it currency pair, be it crypto, you just have to follow same bias. You just have to follow same way. Find out your bias. Find out your bias. Bias is very important, because if you don't know your direction, bias is just like you're not predicting that price will go from this point around 80,400 until 75,000. No, what you're just trying to like catch or predict is just this move from this point A 77,000 to 75,000, from point A to point B. That's just all about directional bias. So you find your bias. So this, let's just say this is our bias. You find your bias. What next do you wait for? On the entry time frame or the lower time frame, wait for a sweep and a break of structure. So that's just it. That will confirm your bias that yes, you're actually going to the upside or to the downside. And then what next? You pick your entry at a discount or a premium level, depending where you're buying, whether you're buying or selling, or you refine a higher time frame key level. So that's just the ways. I'll also post it on my Telegram channel, how to go about it. If you have a daily bias, a weekly bias, or a monthly bias, or 4 hours bias. If you have 4 hours bias, 4 hours candle range, you can refine your entry, you can frame your entries, look for your sweep, your break of structure, you pick your POI at the 30 minutes time frame or 15 minutes time frame. That's just how to go about it. So let's see how I would have taken this one. Let me just do this one. Let's see if I wanted to take this trade. So this was a candle range. Let's say we came to the chart and then we saw this and then we wanted to take our sell at this point. We can see price is coming from a key level, right? Price is coming from key level. Price took out the high. It was because of this broker is not really clear. Price took out the high and then we are drawn to the low, right? Price is coming from key level that caused breakout to the downside. Price took out the high and then we are framing our entries to the lower time frame. So since it's 4 hours CRT, I'll just head over to 30 minutes. If it's not clear, head over to 15 minutes, and that's just it. Alright, so on the 15 minutes time frame, I can clearly see here there was no sweep at this point. There was only a single candle sweep, and price gave us a break of structure to the downside. This was a breakout to the downside. We had breakout to the downside, and then price was also coming from this OCL. Price was coming from this OCL, swept the high of the candlestick, the high of this candlestick. That is more of like a confirmation entry. So if I were to take this trade, how would I have taken this trade? Place my entry at this OCL because that's the next possible zone or key level to take your high probability sales from. So this is going to be your single candle inducement, and then we have our candle range low. So this is going to be our target. So what do? You place your entry. You place your stop loss aggressively at this high. To be giving you 1:7. So let's see how it played out. Alright, right tag does. As you can see, it's super easy. Just mark out your bias, where is price coming from, and then also if you are trading against the trend, let's say we are in a bullish trend and then you see a bearish CRT and the bearish CRT is valid, you can just target your 50% and exit. Target your 50% and exit. So you can see it, and just like that, that's just it. Building your bias with the candle in theory. It's easy if you are doing it the right way, but if you are not doing the right way, probably you're not marking out price not coming from any valid key level or whatever, and then you also see yourself taking losses. So that's it. I'll see you guys on the next video. Yeah, bosh.